Hey guys, I've got two option trades where we can collect over $300 on each trade, so $600 in the next 2 weeks. And get this, it's prior to the earnings drop in basically right after the 2 weeks. So we can avoid earnings and collect $600 in 2 weeks. And the best thing, if it goes against us for some reason, I don't think it will, but if it does, we just roll to the next month and collect more premium. All right, guys, before we jump into it, be sure and hit like and subscribe down below. Let's get 100 likes on this video, and also be sure and download the free options workshop in the link below. It talks about the main benefits of trading options over buying stocks. Okay, guys, the first one that I'm going to talk about is ticker symbol CEG, Constellation Energy Group. And these guys are a leader in energy, including nuclear energy. And as you know, there's a huge amount of energy that's required for the data center growth and AI going forward. So there's a few different reasons that I think it's going to trade in a range. And we're going to place an Iron Condor option trade, which I'll get into and I'll show you on the live option trading platform. However, the technicals, the price target, the support, and the resistance. I'll show you that here in a second. The implied volatility is very high. It's over 100 right now, so that means there's rich option premiums that we can collect. And there's uncertainty. As earnings nears, investors might be hesitant to make large bets in either direction. So they want to wait until after earnings and the big move that may or may not be coming. So if we can get out prior to earnings, we can collect some good money. And the analyst estimates for CEG has an average earnings estimate of $2.19 per share for the current quarter ending in 2024, and a narrow range between 225 and a low estimate of 214. So there's tight expectations as well going forward. And overall, CEG has shown significant year-over-year growth in earnings. And they recently, prior to this, they reported 274, so they only slightly beat the estimate of 272, so they're pretty consistent. Okay, guys, here we are on the Tasty Trade option trading platform. There's a link down below. Check it out. There's benefits if you go through my link, and I also utilize Moomoo, so there's a link to Moomoo as well. They're both for great for trading options. What we're going to do is we're going to be on the trade page right here and table mode, and we're going to punch in CEG, Constellation Energy Corporation. And you can click right here on Research News, and you can check out the fundamentals for the stock as well, the latest news, the financials, and you can see annual. Look at their revenue and net income, really solid. Assets and liabilities, really solid. As far as their profit margin, right there, gross margin, you can see 46%, huge, good PE, 34, not too high, but it is a little bit high due to the fact that all this energy is needed for data centers. But you can see my target is 311. We're right at 309 right now. There's resistance at 345, support at 285. So notice this range right here is what we're looking to set the Iron Condor up within. And you can see Ivy rank 65. That allows us to collect good premium. And look right here, 225 earnings. So if we click over here to the right, you can see earnings date 225. But what we are going to do, click on the trade page, we're going to open up the 221, so prior to earnings. That's only 13 days. We've got 2 weeks that we want to trade within this range prior to earnings. So we're not going to have the announcement and the big volatility move until after earnings, after it's announced, and it either comes out good and maybe the stock goes up, or maybe not so good, or a little bit under expectations and it drops a little. But either way, we're going to be out by that time prior to earnings. So we're going to open up the February 21st option chain, and then puts are on the right, calls are on the left. We are going to, on the bid side, this is to sell. We're going to sell the 285 right here. And you can see this is the 18 delta. So that gives us an 81% probability of profit. It's actually 100 minus 18, it should be 82%. Yeah, 81, 82% right there. Now we're going to go $10 wide. So we're going to have protection here on the 275, and we're going to click on the buy. Now we collect $1.50. Now this is $10 wide, so the max loss is $8.50, and we're going to collect $1.50 as soon as we hit review and send. But we're going to trade both sides and make it an Iron Condor. So again, we're going to go out to around the 20 delta. We're going to go to the 335. We're going to click on the sell on the call side, and then the buy at 345. And we collect another, 155. So we're collecting $305, but we can only lose on one side if it were to move outside that range. So our max loss is $695. We're going to collect $305. We're going to have a 65% probability of profit. So better than 50%. And then we hit review and send and place the trade. But let's take a look at the curve mode. And you can see here visually the range. We're profitable all the way down to that 285 short strike and up to the 335, and 285 to 335. Now let's look at our chart. 285 to 335. So quite a range that we can move within and still keep that $300 profit. Hit review and send and place the trade. All right, guys, we're going to talk about one more no-brainer type trade that I believe is an easy way to make another $300 in the next 2 weeks prior to earnings. And it's in Salesforce, ticker symbol CRM. And we're going to look at putting a put spread on in CRM. So it's undervalued in my opinion and many analyst opinions right now with a price target of around $400. And they've got strong fundamentals. They've got profit margins of 76% and levered free cash flow of $12.94 billion. They're an AI-driven growth company. Salesforce's Agentforce platform is seen as a potential multi-billion-dollar opportunity, with analysts viewing it as a key growth strategy and catalyst going forward. Their market position is very strong. They're dominant in the CRM market with continued expansion into AI and strategic partnerships bolstering its outlook. And you'll see that we've got support at about 325 and the high $400 target price range, and RSI is low right now. So let's jump into a live trade now. Okay, so let's punch in CRM right here in the upper left, and we're on the trade page and we're on table mode. We are going to look and see right here. You can see earnings is 226. We can also see it over here, 226. We're in the overview. And what we're going to do is put on a trade prior to that February 26th date. So 13 days out, February 21st. And what we're going to do after we click on and open up the option chain, we're going to go long. So we're going to sell a put credit spread. I'm going to go to the 325, just right at the money, and click on the sell. And then I'm going to go $10 wide, and I'm going to buy the 315. Now, you can see we collect $3.32. We'll put it at 333 to make it exactly 1/3 the width of the strikes. We can click on curve mode. You can see the profit zone. We keep that full $333. As long as we stay above that 325 strike price. And the max profit is 333, what we collect as soon as we hit that review and send, and max loss is 667. So this is the trade that I like, and you can see on the chart, we talked about the RSI being low. It's down towards that 42 range. And then we've got the chart here. We've got the 200-day moving average in yellow, and we've got the 13-day in the green, and the red is the 50. So the 13 is moving above, but we had a recent drop, and we've got support right here at the 325 level, and that's right where we are now. So I look for a move up, and again, I don't see it dropping a lot further than this support level prior to earnings, but it's okay. If it does, we just roll out. So guys, what happens if these stock prices don't move in our direction prior to earnings? Hey, that's okay. We can either wait for earnings to come out and see if it does move in our favor, or we can go ahead and roll prior to earnings and collect more premium, because And we'll be rolling into the next month, which is after earnings, but they'll still be high premium and we'll be able to do that. So it's kind of a no-lose situation. We either win quick now or we roll just prior to earnings if it moves against us and collect more premium. And then we can wait for the earnings to come out and collect our premium. All right, guys, be sure and download that free options workshop in the link below. Remember to hit like and subscribe. Leave a comment. Ask a question. I answer every one. Let me know what you're trading. Thanks for watching. I'll see you in the next video.